Bitcoin halving date. What happens to your Bitcoin after the halving? Since its inception over a decade ago, Bitcoin has experienced many highs and lows on its journey to disrupt the global financial industry. But few events are as majorly anticipated and impactful as the Bitcoin halving. Every 4 years, like clockwork, the supply of new Bitcoins entering circulation is cut precisely in half. This programmed adjustment sends shockwaves rippling through the entire cryptocurrency market and beyond. As the crypto world counts down to the next halving date nearing in 2024, speculation and debate is reaching a fever pitch once more. Will we see history repeat with an epic bull run kickstarting a new era of mass adoption? Or will conditions shift to paint an entirely new picture? For hodlers, miners, traders, and all those with skin in the game, understanding exactly what this halving entails could make or break fortunes. So today we're diving into the nitty-gritty technicalities and implications of this truly defining moment. From supply and demand dynamics to mining profitability and price volatility, no aspect of the Bitcoin ecosystem is left unchanged. We'll analyze both past proven patterns and open questions for the future. The Bitcoin halving reduces miner rewards, impacting supply and demand dynamics. The next Bitcoin halving date is expected to occur in April 2024. It often leads to market volatility and increased speculation in the cryptocurrency space. Miners need to adapt to the reduced profitability, potentially reshaping the mining landscape. The event stimulates technological innovation and community development within the blockchain ecosystem. The halving reinforces Bitcoin's appeal as a long-term investment asset with a potential hedge against inflation. By unpacking the mechanics and trailblazing each previous halving has sparked, you'll emerge with exclusive insider knowledge to strategize your position in the coming months. The clock is ticking toward another potential revolution. Are you ready to play your cards right? Let's get started. In the world of cryptocurrency, few events carry as much weight and anticipation as the Bitcoin halving. This process, which occurs roughly every 4 years, has significant implications for the entire cryptocurrency landscape, often triggering intense debates within the blockchain community. To truly grasp the importance of the Bitcoin halving, it is crucial to understand what it entails and why it garners such widespread attention and speculation. What is the Bitcoin halving? The Bitcoin halving, also known as the halvening, refers to a pre-coded event that happens in the Bitcoin protocol every 210,000 blocks, roughly every 4 years. It reduces the reward miners receive for validating blockchain transactions. This process is designed to control the issuance of new Bitcoins and maintain its scarcity, thus ensuring a limited BTC supply. Essentially, the halving cuts the BTC rewards given to miners in half. In the original Bitcoin white paper published by the pseudonymous Satoshi Nakamoto in 2008, it was specified that there would be a finite supply of 21 million Bitcoins. This fixed supply mechanism was introduced to prevent inflation and mimic the scarcity of precious metals like gold. By regulating the rate at which new Bitcoins are generated, the protocol aims to create a deflationary currency with the potential to hold its value or appreciate over time. The halving, therefore, plays a pivotal role in controlling the rate at which new Bitcoins are introduced into circulation, slowing down the production of new coins over time. When Bitcoin first came into existence in 2009, miners received 50 BTC as a reward for each block they successfully added to the blockchain. The first halving event took place in 2012, reducing the block reward to 25 BTC. Subsequent halvings in 2016 and 2020 further decreased the reward to 12.5 and 6.25 Bitcoins, respectively. The next Bitcoin halving will reduce the block reward to 3.125 BTC and is expected to occur in April 2024, when the block height reaches 840,000. What happens to your Bitcoin after halving? After a Bitcoin halving event, your existing Bitcoin holdings remain unchanged. the halving process doesn't directly affect the number of Bitcoins you hold. However, it can indirectly impact Bitcoin's price and various aspects of the cryptocurrency ecosystem, which is precisely why investors, traders, and crypto enthusiasts pay such close attention to it. Here are a few reasons why the Bitcoin halving is significant and why people should care. 1. Supply and demand dynamics. With the halving reducing the rate at which new Bitcoins are created, the supply side is constrained. This, in turn, affects the balance between supply and demand, potentially leading to shifts in the market value of Bitcoin. Basic economic principles dictate that when the supply decreases while demand remains constant or increases, the value of the asset is likely to rise. This anticipation of increased scarcity often leads to a surge in investor interest and speculation surrounding Bitcoin. 2. Market volatility. The Bitcoin halving has historically been associated with heightened volatility in the cryptocurrency market. Speculators and investors closely monitor the market dynamics leading up to and following the event, trying to predict its impact on the price of Bitcoin. This anticipation often fuels price fluctuations and increased trading activity. 3. Implications for miners. As the reward for mining new blocks is halved, the profitability of Bitcoin mining is directly impacted. This reduction in rewards can pose challenges for miners, especially those operating with higher energy costs and less efficient hardware. Miners need to assess the viability of their operations post-halving and adjust their strategies accordingly. This often leads to shifts in the mining landscape, with smaller or less efficient miners potentially being pushed out of the market while larger, more resourceful operations continue to thrive. 4. Technological and community development. The Bitcoin halving serves as a significant milestone that prompts discussions and debates within the blockchain community. It encourages developers and stakeholders to explore innovative solutions to address the challenges posed by the changing dynamics of the Bitcoin ecosystem. This drive for technological advancement often leads to the development of new tools, protocols, and initiatives aimed at improving the scalability, efficiency, and security of the Bitcoin network, ultimately fostering its long-term sustainability and growth. 5. Long-term investment implications. For long-term investors, the Bitcoin halving represents a critical event that underscores the asset's deflationary nature and potential as a store of value. The predictable scarcity introduced by the halving mechanism positions Bitcoin as a hedge against inflation and economic instability, appealing to individuals and institutions looking to diversify their investment portfolios. The halving reinforces the narrative of Bitcoin as digital gold, reinforcing its appeal as a long-term investment asset with the potential for substantial appreciation over time. Bitcoin halving countdown timer. As mentioned, the next Bitcoin halving is expected to occur in April 2024, when the block height reaches 840,000. Final thoughts. The Bitcoin halving is not merely a technical adjustment. It's a fundamental pillar of the cryptocurrency ecosystem that shapes the narrative and trajectory of Bitcoin's future. As each halving event unfolds, it amplifies discussions around the intrinsic value of Bitcoin, its role in the broader financial landscape, and its potential as a transformative force in the world of digital finance. While the Bitcoin halving may seem like a subtle technical adjustment, it has profound implications that ripple throughout the entire cryptocurrency industry. By establishing predictable scarcity, it reinforces Bitcoin's narrative as digital gold and underscores its value proposition as a long-term store of wealth. Each passing halving event pushes Bitcoin further into uncharted territory, testing assumptions and stimulating innovative solutions. As we approach the upcoming 2024 reduction, focus will intensify on how the network, miners, developers, and overall community adapts to transition Bitcoin to its next evolutionary stage. However the process unfolds, it will undoubtedly bring both challenges and opportunities that strengthen Bitcoin for the coming years. While short-term market movements remain unpredictable, analysts largely foresee an ongoing bullish trajectory driven by deepening institutional adoption and strengthened network resilience. For observers and participants alike, staying informed on the technical, economic, and societal effects of this landmark programming delivers perspective few other events in the space can. By comprehending Bitcoin's fixed scarcity mechanism, investors stand better positioned to leverage its long-term disruptive potential for portfolio benefits. The coming months promise exciting developments as the definitive supply schedule marches forward.